All right, so then let me kind of rattle off this final topic and come back into the takeaways from all this. On the wage front, we had September wages up about 0.6% last month, more than expected. Average hourly earnings are running around a 6% annualized pace over the past 6 months. That's huge. Compare that with the year-on-year average of just 3% over the past decade. So, Rich, you've already said, look for companies with pricing power. You think bond yields are going up and all the rest of it. But I guess the question is, what would you specifically have in your basket? I mean, what is going to be, you think, then the market trend into the end of the year, maybe even kind of into the first quarter of next year? What should people be thinking about in terms of where the strongest performance will be?
So, Kelly, we've been positioned on the cyclical side. We've been overweight energy, materials, industrials, small cap value, all the things that are very sensitive to, as I said, the nominal economy. I think one thing that people aren't thinking enough about are the opportunities outside the United States. One of my favorite lines is that France isn't exactly the hotbed of innovation and disruption, yet France is outperforming NASDAQ so far this year.
Wow.
So I think there's lots of opportunities outside the United States as well that people are just ignoring. But again, the key is pricing power, nominal growth, not long-term secular growth, which doesn't perform well as interest rates go up.
And Michelle, it's interesting that Rich mentioned France, which is a country I've actually heard people like Jeremy Grantham speak of positively in terms of the nominal wage growth or real wage growth they've delivered. That they're way ahead of the U.S. And we've often kind of looked at that maybe as a sign of an inefficient economy. But maybe that's exactly where the U.S. needs to go. How much higher do you think wages could go here if this is a real kind of secular reset?
Yeah, I think you're touching on something important, which is that when you look at where the wage growth has been, it's the lower income, lower skilled cohort that's seeing the most dramatic increases in wages. And one can argue that that's a long time coming, that the wage growth for that population was quite stagnant, especially relative to inflation. So real wages were contracting for many folks. And now that we have this extraordinary demand for those workers with a restricted supply, you're naturally seeing this level set higher in wages. Do I anticipate that we're going to see wage growth of this magnitude continue going forward? No. I think this is more of a level set, and then we'll probably see more moderate gains in wages into the future. But one other really important note when you think about this for the broader economy, you have to think about wage growth relative to productivity growth. And we're seeing both right now. So for companies, that actually is quite positive.
That's a great sign. Steve, I'll give you the last word then. What would you say about how much higher wages need to go in order to fill all the open jobs, make sure there's not a shortage of truckers, and that this whole supply side of the economy isn't putting the brakes on things?
Yeah, well, I think Michelle made some great points. It's in the service sector where the wage growth is the highest, blue-collar jobs, truck drivers, where there are the shortages. And these are the jobs that require that you be on site in person. If you look at the mandates, and public policy matters, if you look at the mandates, you must be vaccinated to be employed. That's probably not the right way to do it. They could fix it by simply saying to be on site and leave the people who want to work remotely and the employers who are willing to have remote workers, leave them alone. If you did that, you would give the flexibility to the economy to balance that out with on-site, in-person, and remote work. If you did that, then I think you would see wages sort of normalize over the course of 2022. So it's public policy related as well as Delta variant related.
That's a great point, especially in this kind of, everything about this has been unusual. And the sort of necessary cures at this point still are unusual relative to the recent past. We'll leave it there. Guys, thank you all so much today. Michelle Meyer, Steve Odland, and Rich Bernstein digging through the jobs report and coming away with some takeaways.